Hi everyone, Donnie Schultz, Embrace Home Loans here with your Friday market update, February 4th, a little bit after 4 p.m. today. So more bad news on interest rates. We've been talking for the last few weeks about this trend that has caused rates to increase. That trend has continued today. The first 2 weeks of January, we saw about a 0.5% increase on 30-year fixed rate mortgages across the board. Quick increase for a short amount of time. The next 2 weeks, we saw a lot of volatility, but not much change in the rates. If we're looking at the average offer rates, we're really hanging around that 3.5, 3.625 range, over the last 14 days or so. Today, we had an outstanding jobs report. New jobs created over 300,000 higher than what was estimated. Participation rate increase, which means more people are back to work. Unemployment rate ticked up slightly, but nothing to offset that. So, this was really a jobs report that stood out to the market, and rates were under pressure immediately after that was released this morning. It really just solidifies the underlying conditions that we've been discussing. The Federal Reserve shifting their policy to protect against inflation. The stronger economic data that comes out, the more aggressive they could potentially be at hiking interest rates, reducing asset purchases, and reducing their balance sheet. And that is going to have a very negative short-term impact on things like fixed rate mortgages. So today we saw another 1/8 of an increase on rates across the board. Average rate right now, based on locks, is close to 3.875. That's as high as it has been since October of 2019. So buyers need to understand that there is a cost of waiting right now. It is more important than ever for buyers to get out, to get offers in, and to get offers accepted. And nobody going into contract right now should be considering floating their loan. General term in markets is you don't want to catch a falling knife. At some point, we should see a reversal, but we don't know when that's going to be. That could be another 0.25% in interest rates. That could be another 0.5% in interest rates. My personal opinion is that we probably see rates settle in the 4 to 4.25% range as the Fed starts shifting their policy. That policy shift should eventually lead to rates reversing and coming back lower. That is the historical trend when the Federal Reserve fights inflation and they increase the federal funds rate. That short-term rate will go up. That will cause mortgage rates to start moving back lower. But there's a process, and that process involves the pressure that we're seeing right now on upward trends. So get those buyers motivated, get those buyers locked in. We want to protect. We do not want to see buyers floating. We do not want to be looking at short-term lock strategies like 15 or 30-day locks. These buyers need to be going into contract and locking for 90, 120 days, whatever they need to cover. If rates do reverse in that time, most lenders are going to have some type of float-down strategy that protects the buyer in the case that we see big downside and rates all of a sudden start dropping significantly. I don't think we see that, which is why buyers should be locking. Other news this week, Fannie Mae and Freddie Mac announced that they are lifting overlays for self-employed borrowers. So COVID caused Fannie Mae and Freddie Mac to require lenders to document that self-employed borrowers' businesses were operating. Self-employed borrowers needed to provide P&Ls. They needed to provide bank statements before closing. They had to provide receipts within 7 days of closing just to show that the business was not impacted by COVID and shutdowns. All of those overlays have been lifted as long as the borrower has filed their 2020 tax returns. That is all we need. We need their 2020 tax returns, and we need a letter from their CPA saying the business is still operating. So that's great news for self-employed borrowers. Relieves a lot of paperwork, a lot of stress, that deeper analysis into the P&Ls and the business bank statements. Great news. Jumping back to motivating buyers, I included a link to an appraisal waiver strategy that buyers should be considering depending on their down payment. Higher the down payment, the more aggressive buyers can be with that waiver. Really important for them to understand the numbers. How does an under appraisal impact their financing terms, and what can they offer to make sure that they are still protected and the plan still works for their purchase. So take a look at that link. Let me know if you have any questions. Hope everybody has a great weekend. Talk to you soon.